How do I make it in crypto in 2026?
Hold the right assets and do nothing. Just openly look at the space and say, how much risk am I prepared to take? My entire thesis is the length of the cycle. I think the length of this cycle is 5 years. I changed my view. Everything else is just fucking noise.
Is it realistic for people to put all their hope in their crypto portfolio?
No, it's not realistic, but it's not the best answer. Because crypto, at core...
Raoul Pal, the co-founder and CEO of Real Vision.
Building a platform that decodes market insights.
His Don't Fuck This Up framework is changing how people think about risk, regret, and long game.
Is your advice in December 2025 still to buy the fucking dip?
Yeah, I think we had the final low. The liquidity got withdrawn by the US government, and then they shut down the government, and then now there's no liquidity. So what happened was crypto, being the most liquidity sensitive, nuked. Now, looking forwards...
You talk about the minimum regret portfolio. What does that mean?
The minimum regret is to not look back and think you're a fucking moron, Raoul. It's just don't do stupid stuff. Layer ones are much easier than anything else. It's not going to go to zero in one cycle.
You mentioned before SUI. What does your portfolio look like today in December 2025?
I haven't done a single trade apart from I bought some more SUI 3 weeks ago. I haven't actually done anything, not reallocated any assets, done nothing. So I don't do anything much. People are going to clip this again and say, look, he's really overweight SUI, blah, blah, blah. And then somebody's going to say, scammer. It's like, everybody just fuck off. Just fuck off.
The online hate is because every 6 months you're the god, 6 months later you're a moron. How do you deal with that?
It's really hard because...
Hi everyone, this is the little bit that I know none of you like that can help us make a huge difference for this show, and we want to take it next. 71% of the people who regularly watch When Shift Happens have not subscribed. And so all I'd ask you, if you want to make a huge difference, is the following. If you've seen this show before and you like it, help me, help my team, hit the subscribe button, and we'll continue to build this show for you. Thank you. I just get sick all the time when I do these word tours.
Yeah.
Like, because you just constantly jet lagged for like a month and a half, and constantly on planes. And I get these sort of viruses that it's not really flu. You don't really have fever. You're fucked. And I had that token 2049 after these conferences. I'm in the studio, but people shake hands, hugs, everything. I mean, we're in one now, so let's see what happens afterwards. But I get that, and then I recorded 16 podcasts. And then the week after, I'm sick, but I still do 3 podcasts. And then the Monday after, I'm kind of recovering, and I do 3 podcasts, and then I fly to Abu Dhabi, 1 podcast, then I come to Dubai, 1 podcast, then I fly to Prague for Trezor conference, which is a sponsor. 1 podcast with the CEO, 1 talk on the stage with the founders, the C-level people. Then I fly to New York. It's always jet lag. Then I fly to SF, and then I do Brian Armstrong in SF, and his first question is like, how are you doing? And I'm like, I'm fucked. I have to use my brain all the time. But
I know. Interviewing, people don't realize how hard interviewing is.
It's so much easier to get interviewed, actually.
So easy.
Yeah.
Well, interviewing, I don't do the prep that you do, but you really have to engage with them. Because you need to make it interesting. You have to get a narrative arc out of it. It's hard.
Yeah, you have to be there. I don't do many interviews as a guest, but I did Trezor podcast, and Bankless actually texted me also.
Oh, wow.
And the Trezor podcast, I was just there, and thank you so much. The Trezor podcast, I was just there, and I was just answering questions. I was like, man, I wish my life was that.
So much easier.
I wish my life was that.
And I've got both.
Yeah,
I do both. I have to do the interviewing and be interviewed.
And run businesses. And be serious about life, right? Because podcasting
and then just get hated online.
Yeah, the online hate is because every 6 months it's you're the god, and then 6 months later
we're so back. That's the whole crypto cycle. It's the same thing.
6 months later you're a moron, total moron, as you say, right?
Yeah.
How do you deal with that?
It's really hard because the people who actually do the criticism are the people who don't see my work. So then they anchor onto something. Once you filter out who's verified and who's non-verified, because I've tried that a few times, huge difference.
Interesting.
And so a lot of it, I think, is actually done on purpose to spread discontent. So I think the state actors who are involved in comment section everywhere, just spreading discontent. Whoever they can attack, they attack for whatever reason.
Can you explain that a bit more? It's like bots army, but real people, or what's
Yeah. I think it's either bot army or real people. Because I go to some of these and I look at the accounts and they've been opened 6 months, 3 months. They follow one person, it's me, and they just come on and then attack me about some thesis. And it's weird. And then you go and look at what they do and they're just retweeting some things. And then they just have these aggressive posts. And I think that state actors have figured out that you can spread discontent and malcontent by attacking everybody about everything. And people see the comment section and then they get riled up by stuff. It's really weird, but I've noticed it for a long time. And so I think some of it's real. That's people who don't really understand or they're trying to blame people for their own mistakes. But there's a lot of stuff that's not driven by that when you go and look at the accounts. Now, it's helped that X has now done this thing where you can see where the accounts are from. But even then, I mean, these people are smarter than just that because there's VPNs or there's localized, whether it's done from the US or wherever.
But you say state actors, like what's the reason why someone would attack anyone for anything?
Because it just breeds anxiety at societal level. That nothing is the truth, nothing is certain, everybody's a scammer, everything is wrong, they're wrong, they're wrong, they're wrong. And it just breeds this feeling on the internet that society's falling apart. And it's done on purpose. So it was Russia a long time ago realized that the best way of destroying a societal system was to make there be no source of truth. And they would sponsor protests against the government to create friction and pro-government, and they would sponsor all of these things in it so nobody knew the source of truth. They would plant fake stories and real stories. So when nobody knows where the truth is, there's no foundation to society because nobody trusts anything. And when nobody trusts anything, you can then force people to do things.
For example, today,
you can polarize the US political system so easily. And we've seen this. We've seen it all the way through. And people say state actors are involved in elections. They've been involved in both sides of the elections. They've not driven one side, but they've driven this complete political divide by forcing people to become more polarized. And then they attack on both sides. So what you get is one side thinking that other side is awful. They hate me. They're terrible people. The other side is seeing the same. And really, when you look at it, when you ask most people, they're more centric than this would suggest. But the internet's dividing them and it's being forced, the division's being forced because then you get a populace that doesn't trust anybody or anything. And so therefore you can't have a political consensus. You can't get consensus on anything. And that makes it harder for the country to function in more important ways.
But who benefits from that?
State actors, for example, if you build so much discontent, you build so many conspiracies that nobody knows anything, then if something happens in the world and normally, let's say the United States would step in or Europe would step in or the UK or whoever it is or France or whoever, if you've built enough discontent in the media, nobody trusts anything. And so the population doesn't get behind stuff. So then this population consensus that you kind of need, even in a political fractured world, to do certain things. But what they try and do is make sure that you can't get consensus. So it becomes ungovernable. And the more ungovernable it is, the more discontented people feel because they feel like those people are attacking these people and everyone hates each other more. If they hate each other more, you can't build any consensus about anything. It's really problematic.
This is your theory. You've talked to other people who have big influence like you who also get attacked and kind of like see a pattern there.
Yes, you do see it. And it's been going on since, it certainly happened with Brexit. And that was kind of proven that was the case. Again, on both sides. So most people look at it and think, oh, it's them trying to attack the left or the right. No. It's on both sides. And it's been very prevalent in US elections, but it's prevalent all across the internet. That's why That's why X is putting in the location thing. It's because you want to see, are you being rage baited by somebody based out of a different country? And we found there's a lot of evidence of that.
Absolutely. I mean, in the beginning, there was all these screenshots, and you're like, then you go and check yourself, this cannot be real. And you check, actually, it's real. Actually, it's real. Actually, it's real. Oh, fuck.
Yeah, I know. And what they found, what was hilarious, again, because one side thinks it's the other side doing it. When you looked at a bunch of these really big MAGA accounts and these really hardcore left-wing accounts were all being run by foreign countries. And you're like, really? Fuck is this? So then, it happened a lot with Palestine, where you have no idea what the truth was because everybody reporting on it everywhere was not telling the truth. Because it created division.
So what do we do?
We need digital ID with zero knowledge proofs. There's no way around this. But you need to be able to prove certain elements of who you are. A, you're human. B, where you're based, not by your bloody VPN, but by your passport. But nobody needs to see it. That's what the beauty of zero knowledge proofs. It just needs to confirm various factors. There has to be some way of doing this, because once you throw AI into it, as we know, what you're doing is you're making an infinite content machine that can make content faster than you and I can, because it can make this. It could do a 10-minute interview between you and I now already, and nobody's going to know the difference.
Maybe you'll be a bit less tanned on the AI version.
That's right.
Maybe I'll be a bit more tanned on the AI version.
Maybe you'd have a girlfriend in the AI version.
Actually, I have one.
Holy shit, no. Really?
Since right after we talked last time. You had this power on me.
Are you sure? You're just lying to me.
I was sure. I was like, this girlfriend thing is going to come today. Well, I didn't expect it would be that early in the conversation. But yeah, actually.
I was thinking of this.
Actually, yes, I did. You have to look at yourself.
You did or do have a girlfriend?
Well, I do. Yeah.
Really?
Since right after we talked last time. I mean, shortly after.
Okay. But you're still wearing the same t-shirt.
I do, but it worked. It worked. It works for the business and for the girlfriend. It's okay. She doesn't care too much. You mentioned all these angry people, some of whom are real, some of whom are not real. Let's think about the real ones. The ones who are really angry or, let's say, emotional. I mean, they're humans, right? It's normal.
Yeah.
It's because you always say everybody has their hopes and dreams in their portfolio, right? In the crypto portfolio. Is it realistic for people to put all their hope and dreams in their crypto portfolio or in a crypto trade?
No, it's not realistic. But it's the only answer people can find. Because you can say the other way, which is, just get a second job or a third job. They're already doing 3 jobs. What is the answer? And I can't find one, because we can't change the political system. We can't change the debasement of currency to pay for the debt. How do we give them a chance? Would you give them handouts? Possible. Or do you give them access to the casino? It's not the best answer. Because crypto at core, those people who are more desperate tend to go further down the casino route, as opposed to, and you mentioned this a lot in your X posts, is it's a slow game, but people want it to happen immediately. But really, if you just said, hey, in 10 years' time, I could probably 20x my money, I mean, that's la la land performance versus anything else. But people don't want to do it. They want 20x their money this month or this year. And then they break it down and they delude themselves that they only have the time of the cycle or this quarter or this trade. And it's like, and then people just get angry because it doesn't work. And it doesn't work. It's never worked.
There's an entire section on that today, actually. So I didn't get that sick and travel that much for nothing. I went on the field, talked to people in the Silicon Valley, and really grasped this much more long-term view. And today we're going to discuss that because I think it's really important for people to understand, and they don't want to.
They don't want to.
They don't want to.
And you see a lot of the anger is, and we've talked about this in the past, is time horizon mismatch. It's like you can tell them where it's going. This adoption of technology is not stopping, and it's at 3 and a bit trillion today. It's going to 100 trillion. So we're 3% of the journey there. And I'm saying it's probably going to take 10 years. That's a huge trade. And everyone's like, but what about today? The market went down.
Quick one. I want to thank our partners who help us make this show possible. I'd like to thank our friends at Jupiter, the DeFi super app. Anything you want to do on chain, from trading to earning yield, you can just use Jupiter. Personally, I'd recommend getting the Jupiter wallet on either your laptop or your phone, 10 times faster and 10 times cheaper than the competition. You're gonna love it. Thank you to our friends at Paradex for supporting this show. Paradex is the leading perpetuals decentralized exchange with zero fees, deep liquidity, and privacy. Season 2 runs through the end of January, so you do not want to miss this one. Trade on Paradex and start earning points by using the link in the description down below. At When Shift Happens, we're huge believers in freedom, and privacy is at the core of it. That is why we partnered with Zashi Wallet, the easiest self-custody wallet for private transactions. You can send, receive, and spend Zcash without middleman or surveillance using Zashi, the wallet that was built by the team that launched Zcash in 2016. And last but not least, thank you to the awesome team at Custcard, my go-to card to spend my stablecoins directly with my Apple Pay to buy anything, food, coffee, hotel night, or plane tickets without having to use a bank ever again. What do you tell someone a hater? I saw one the other day. I saw many.
One hating of them, you or hating me?
Hating you.
Oh, okay.
I mean,
I'm so touched.
For me, they hate, mostly what they hate. I don't take too much risk. I'm kind of like this neutral Swiss dude asking questions, right? Today I'll take a bit more risk. I'll talk a bit more. But what they hate on is my accent. It's fine. I'm like, I'm used to it. They're like, I don't understand anything to what you say. Whatever, it's fine. But I saw one who basically said the classic, you're again saying zoom out when things don't go well, right? Basically, they're saying that you use the zoom out excuse and it's too easy as an excuse to use when things are not doing as well as we hope in the short term. What do you tell someone like that?
So the short term is more dominated by noise or shorter term factors. The long term is driven by the two key factors, network adoption and debasement of currency. So it's much more forecastable, probabilistically so. The short term is less so. So of course, the short term deviates from the long term often, always does. And people don't want to believe that. So, right, everyone put their hopes and dreams into the M2 chart. I said it's not going to always work perfectly. Everyone reads that as Raoul says it's going to work perfectly and it's always going to match. So then it deviates. So then my job as a macro analyst is to figure out, why is it deviating? What's changed? And you see it deviating on lots of charts, from monetary measures to historical parallels. And it's like, okay, something here has happened that I don't quite understand. So I then do the work on it. And I figure out, okay, this was to do with the and we can talk about the details of it, the withdrawal of liquidity as the Treasury built the general account. And so it's like, okay, it's understandable. We see what's going on. So you adjust your understanding of where you are in that long-term trend and what's going on. And then had the government shutdown. People don't see that. They think it should all work perfectly. It never can do, because the short term always has a lot more noise to signal ratio, and the long term has all of the signal to noise ratio.
I actually saw a bunch of very smart people a lot of these people who are in crypto now, they're previous TradFi people, especially traders, and they're saying, obviously, these crypto markets are maturing, changing. There's more and more institutions, which means that the more institutions, the more professional traders using AI and all that stuff, which basically says that there's almost no alpha anymore in crypto, except in the long term. So the only thing you can do is kind of buy and hold as a normal investor, right? Or normal trader, and bet on this long-term trend that you're talking about.
So I've seen this all before. I left the hedge fund industry back in 2004 because of this. So back in 2004, I was doing macro. Macro had been a higher volatile strategy, and it was longer term, because what macro means is you're basically trading around macroeconomics, economic forces. Now, there's one ISM data piece or one GDP data piece a quarter, one ISM a month. You're using one data piece. So really you need a string of data pieces over a period of time to make a trend. So you're talking about a minimum trade of 6 months. Maybe at turning points, you might get a 3-month trade. But really, it's 18 months to 3 years. That's what macro really is. And then what I realized is as new investors came into the hedge fund investing space, they forced everybody into monthly mark to market. And then you were judged is how much did you go up or down that month? Not how are you doing over the year or how's that trade doing? And what you found is it didn't matter whether you bought something here and it had gone up there. If it had drawn down against you a bit that month and you're still well in profits, you actually closed the trade.
Mm-hmm.
And I'm like, nobody's going to make money like this. What it did was crush volatility and lowered everybody's returns. And the same is happening in crypto today. It got worse with macro because then the rise of the systems funds and the high frequency traders and everything else. So macro lost all of its edge from short-term trading. And I left to start Global Macro Investor to prove the point that longer-term time horizons win. And GMI is now easily the best performing research service in history. And that's with some terrible times when it as well. But it just proves that time horizon is the single best thing that you've got.
Mm. Highly underrated. Absolutely.
It is. But people are impatient and people want to do stuff. They want to trade around.
Mm.
And you don't need it. Find your adrenaline somewhere else.
This is a hard one for the ADHD generation.
Yeah. Yeah, because everything's a computer game, right?
Mm, absolutely. The reason why people are angry is because 2025 has been a bit tough or difficult for crypto investors. And the last few years also, I would say, if you were not in the right coins, which were not that many, you actually didn't do that well, right? There's no up only everything anymore.
Yeah.
Why is that?
It's because I keep trying to explain to people, it's all about liquidity. It's the most dominant macro factor of all time right now. It's one game. One game is what is liquidity doing? The second game we overlay in crypto is what is the adoption of the particular token asset you're using, whether it's a layer 2, a layer 1, an applications layer, DeFi, whatever it is. It's like, what's the speed of adoption on top of what's the amount of debasement going on? That's the whole game we're in. So people need to figure out that whole game. Then it gets a little bit complicated because how do we get liquidity? So liquidity in the traditional crypto speak was quantitative easing. They're printing money, but they stopped doing that. And then you had to figure out, oh, it's FedNet liquidity, which is the Treasury General Account and the reverse repo. And if you think about that being the only liquidity that was in the system, they drained the reverse repo. And the Treasury General Account is a checking account that they fill up, drain, fill up, drain. So this keeps going up and down. Doesn't actually help with liquidity. This draining of the reverse repo was the liquidity that we saw. So the liquidity kind of rate of change has been low. So that's one element. Liquidity rate of change has been low. Then we've had an extension to the cycle. People said there was like some Satoshi from the gods said there shall be a 4-year cycle. It shall be so. That's bullshit. There has to be a reason for it. It's the same reason the ISM was a perfect cycle. It's the same reason the NASDAQ year-on-year rate of change is a perfect cycle. All the same. They're all driven by this debt cycle we've talked about. From 2008, they reset interest rates to zero. All major countries put their debt into the 3 to 5 year bucket. And so every 4 years, we roll the debt. Now, I start looking at why is the business cycle not picking up? Why is my thesis not working? While the online attackers like, see, his thesis is bullshit. My job is to say why, to understand why it's not working. And then so I did the foundational work back again of the everything code. And we found that in 2022, 2021 and 2022, they'd actually lengthened the duration because rates went back down to zero and they lengthened the duration of the debt maturity to 5 years, just over 5 years. And then it's like, oh, I get it. Normally, year 4 of the cycle is when they have to do all the printing. It's the year of the most amount of debt refi payments. Now it's gone out a year to year 5. So it's 2026. So kind of that's what I'm looking at within this whole structure. and trying to understand why it's been slow is because liquidity wasn't required yet. The liquidity really is required in 2026 because we've got $10 trillion to roll. So it's really been that. There's also more tokens in the market.
Yeah.
And so to find the thing that's getting traction requires work or astuteness in sifting through tens of thousands of assets prices, which is why I always say don't do that. Use the don't fuck this up thesis and just make it easy for yourself. Own mainly big stuff. Don't go too far out the risk curve. And if you do it with a small amount of money. You and I have talked about this endlessly.
Yeah. And
endlessly people go to me, well, you fucked up this cycle. Where was my banana zone? My tokens are down 90%. I'm like, where did I tell you to do that?
So there is kind of two layers, liquidity that comes or goes, etc. But on average, throughout a long period of time, it goes up, right?
Yes.
But then there's these tokens, there's too many of them. Liquidity cannot save. At some point, a couple of years ago, everything would go up like crazy, even if you bought shit, right? Today, with all these tokens, liquidity cannot save everyone's ass. I think that's an important message.
Correct.
So there is a lot of these tokens, despite more liquidity, that will make people lose money.
Yeah.
Because they're bad investments.
Yeah. Yeah, that's right. They're bad investments. They're not being used. Sure, some can become memes and they can capture attention for a period of time, but persistence in memes is very difficult. And then what people don't understand is there's even a risk curve amongst the major tokens.
Absolutely.
So Bitcoin, it drew down, 30%. Ethereum was 40%. Solana was 50%. Sui was 60%, 65%. They're all a risk curve depending on how mature they are and how many users they have and the depth of the markets.
You mentioned don't fuck this up, right? Let's make it kind of a more traditional investing framework. In traditional investing, one of the most important concepts that it sounds so boring to young investors in general, especially in crypto, because we're all degenerates when we start, especially the ADHD generation, is that the goal to build wealth is not to make is not to make a lot of money, is to not lose too much and then compound over a long period of time, right? Which sounds so boring. But it's what it is. And I think with this last cycle where most crypto actually lost people money, people are starting to grasp more and more this kind of timeless principle of investing. You talk about the minimum regret portfolio. What does that mean?
The minimum regret is to not look back and think, you're a fucking moron, Raoul. Why were you doing that? We've spoken about, the 10%, which I never even got to. I probably got to 5% in like the degen bag that we talked about. And we talked about smoking chicken fish and how ridiculous it was. It's gone basically to zero. And I held it all the way because I couldn't dump on people, blah, blah, blah. And that wallet of shame is always it's kind of actually amusing if it's small enough that it doesn't really matter. But the minimum regret portfolio is just don't do stupid stuff. And like layer ones are much easier than anything else. If it's a decent size layer one, has decent adoption, it's not going to go to zero in one cycle. It will bleed to death over time, but it won't go to zero. So you don't get the Lunar effect or the DeFi protocol effect or any of these things that can go from there to there instantly. Layer ones don't do that. Okay, that's a good thing. And then you need to check, am I just following narrative because I saw somebody say that this layer one is going to be a great opportunity? I see that 99% of the time. When just open up ChatGPT, it's free, and ask it, hey, what's the on-chain metrics growth like for this? What's the user growth like for this? Anybody can do research in 1 second now, but nobody does. And then they'll go, but you told me this is going to happen. And it's like, well, what do you actually know about this thing? Nothing.
How good is GPT at on-chain metrics?
So I wrote an article in Global Macro Investor last weekend about Metcalfe's law and about how to value it. And I'd been brainstorming with my AI on this. And we got to an easy way to measure it was using stablecoin flows, stablecoin value transfers on a layer one versus the number of active users and we defined active users by, and this is ChatGPT came up with this. It's like, well, I think we should use kind of people who use DeFi, people who use this, people who like 5 metrics for that, and then ranked the chains for it and said what was overvalued, what was undervalued. It gives you a pretty decent idea. So it's really good at almost everything. It's great reading technical charts as well. So you can give it a chart and say, what do you think? And it'll give you a decent output.
No excuse anymore.
There isn't really that I don't understand it. I don't know how to do the homework. You just keep asking ChatGPT until you get the right phrasing right to get what you want out of it. Because at first you're like, well, it's stupid. It doesn't know how to do this. I'm like, no. It's generally you who's stupid by not asking the right questions. I've learned this the hard way. It just takes time.
I have to give a shout out to your Don't Fuck This Up framework because it made my cycle so much smoother.
It's so much less stressful, right?
I mean, if you also build businesses that are doing really well, etc., like obviously it adds another layer on like of calm because you talk about income all the time, right? Game changer, like insane game changer.
Yeah.
But just the Don't Fuck This Up framework on, I haven't round tripped again. It feels good.
No.
It feels good.
Yeah, a round trip smoking chicken fish, but other than that, I haven't round tripped anything. I mean, it's been compounding over time and it goes up and down, but it seems to be working.
Well, the only ones I round tripped, if I think about it, are my fart coin, my Bobcat.
Yeah, all of that shit.
All this shit, yeah. Of course.
Which we kind of knew, but we thought we might outsmart it and get out because there's going to be another leg higher, and there never was.
Never is. There never is. My question is, there's an expression that says, do as I say, not as I do. Does Raoul Pal follow his own Don't Fuck This Up framework?
Yes and no.
Why?
Because I'm more concentrated. Again, every time everybody hears that I'm concentrated, they think they should be concentrated. I'm concentrated because I've built a valuation metric based on all sorts of things about why I'm overweight. Sweet. Now, can I change that? Will I change that? Most likely at some point. But right now, I'm pretty comfortable with it. Yes, it's been more volatile because it's designed to be more volatile because it's an early stage, early network adoption model. So you have to understand that it's more volatile to the downside and more volatile on the upside. So today, we've just finished. We've just finished a awful 2 weeks of relentless selling. You turn around, I woke up this morning, or yesterday morning, I woke up and, or was this morning, and Sui was up overnight suddenly 20%.
I saw 30% before.
It's like another 8% now. And everything else was up like 8%. I'm like, okay. So it works both on the upside and the downside. I understand that and I can accept that. Other people shouldn't. So do I follow my own? Well, I have a bunch of, we talked about digital art in Ethereum. I don't think of that as ETH, but it is an ETH exposure. But other than that, the rest is I have businesses that flow cash flow that allow me to make allocations correctly. And I'm taking more risk because I do more homework. Doesn't mean I'm going to be right.
Could it be possible?
But then I'm only to blame myself if I get that wrong. For other people, don't listen to my asset allocation. Listen to my general guidelines.
Never borrow conviction. That's
Correct.
the most important. Every time I lost money, I was borrowing conviction.
Oh yeah, I've done it every time. Every single time that I didn't do it myself and figure it out myself. Every single time. It was interesting. I just interviewed Mert about Zcash. And the one question I asked him, and today the markets are rallying and Zcash is falling. And I said, are we sure it's not just, I said, I really like the narrative. It kind of makes sense. But are you sure we're not just seeing a rotation where people are desperate to back one thing again in the middle of a sideways down market? You don't know. And people rent conviction. Oh, Ravikant said it. And so said it. Therefore, we should buy it. Look, it's going up. So you build this reflexive loop. But the reality is people are just rotating money from something else that they're selling to try and find the thing. It needs to have proper long-term traction.
I mean, this one has a 9-year of story.
Yeah,
of
going.
Life. Yeah, absolutely.
Now, I actually like the narrative. I don't own any. I like the narrative. I get it. I get having privacy. But as I talked to Mert about is we're so tired of fighting governments, and anybody who chooses privacy coins are going to have to do it all over again because they're going to try and stop it. It's like, do you really want that fight? I mean, I understand why on a philosophical level or on a, self-interest level, why you'd want to have that fight. But, I've been in this business since 2013. It's another big fight to have.
That's a huge fight.
It really is.
Yes. That's the ultimate fight. But it also makes so much sense. If you think about it.
It does. I mean, and we should have the ability to have private money. But the US imposed FATCA on the world, which is their ability to basically charge anybody with money laundering. Every bank, everybody is under that guideline. And so that stops this KYC, AML stuff everywhere. The US doesn't really do it in the US to the same extent that everybody else has to. And so privacy coins basically contravene what the US is telling the world. So every bank is going to fight it. It's like when I actually figured out why Cayman banks were so scared of crypto, it wasn't because they had some fundamental hatred for crypto rails. There's like, we can't do the FATCA stuff and the US will prosecute us because we can't do on-chain KYC. I'm like, oh, I get it now. So it's actually regulation still that's causing this.
Quick one. I want to thank our partners who help us make this show possible. Thank you, Trezor, my favorite cold wallet to store my crypto and make sure I sleep well at night. If you want to order a Trezor wallet and sleep well at night too, you can use my promo code WSH10 to get a 10% discount. Big thank you to Bitwise Asset Management for backing today's conversation. Bitwise is a crypto specialist asset manager with more than $15 billion in client assets across 30 plus crypto solutions, including ETFs, index funds, alpha strategies, staking, and more. However you like to invest in crypto, Bitwise has something for you. Thank you to our friends at Sui for supporting this show. Sui is a scalable layer 1 blockchain that's fast, secure, and affordable, built by previous Facebook developers, and that delivers the benefits of Web3 with the ease of Web2. Thank you to Story Protocol, the IP layer of the internet, for supporting today's conversation. Story is building an open system for creators to register, manage, and grow their IP on chain. Whether you're building words, stories, or characters, Story Protocol gives you the tools to protect and expand your creative universe. To support this show, please check the sponsor links in the description down below. On privacy and Zcash, I have a section on that, so I'll go with now. I basically bought my first few Bitcoins in late 2018, early 19. And the reason for that is because of 3 gentlemen that I had identified online that were pretty excellent, obviously, at predicting the future of technology. Naval, Balaji, and Chamath. And I was like, the combination of these 3 guys together, who were in 2000, late 18 or early 19, they're saying that where Bitcoin is 3K or whatever, and they're saying it's going to 100K. These guys are a million times smarter than me, each on their own. So if you put them together, so I was like, okay, I need to buy some Bitcoin. And
the issue is they're all friends.
Yeah.
So you're actually not getting the multiplication of intelligence. You're getting a group of people agreeing something, which is still signal in it. It's still signal.
I think they're all in Bitcoin since like 2012, right?
Yeah. Yeah.
And then here we are 7 years later, Bitcoin has reached 100K as they predicted. And now 2 of them, Naval and Balaji, are back with another big one, privacy, right? Because as you said, there's always this narrative of the month, of the semester, of the year, etc. But I have to remember who are the guys who basically I was listening to and made me, I mean, they didn't make me buy, but I was fine. It's a no-brainer. I need to buy some Bitcoin a couple of years ago. And now 2 out of them, they're saying, Naval says Zcash is the last, privacy, right? But Zcash is the last 1000x in crypto. It's an insurance against Bitcoin privacy. Balaji says after Bitcoin, only 2 protocol breakthrough matter, Ethereum for programmability and Zcash for privacy. Well, we have to pay attention because
I'm going to layer onto that as well is Barry Silbert, somebody who I've known for a very long time.
Yes.
And Barry has been telling me this for a long time. And he was wrong until he wasn't. But these are the people who held Bitcoin for a long time through down 90% moves. Chris Beniski, another one. So there's a lot of signal from people that I really trust or listen to. The issue is it all came from, no, this time around it's all come from Naval again. But he's a high signal to noise ratio anyway. So I agree.
What do you need to pull the trigger on a Zcash?
What I discussed with Mert in the interview was like, we can't prove it until the whole market goes up and it continues trend and not a rotation. Right now, it's confirming the rotation thesis, but I kind of think that probably it got overbought anyway. And what you want to see is whether it finds a base and then starts pulling up again. Now, do I need to buy it now? Well, I've got enough crypto exposure. Do I need that asset to say I was in earliest? I don't really. So I'm not sure I'm going to chase it, but I might buy it in the next down cycle. So I think that comes in, let's say 2027. Maybe that'll be on my shopping list because again, it's likely to fall a significant amount. And then for me, it's the better entry than now. I've got my bet set. I don't really need to switch right now unless something changes. But I would think of it as, okay, let's see how it does. Like Solana did last cycle and it pulls back. It's the same thesis I've got for all of these is if you can prove that then it's not doing the spike and then back down again that it's done every time, then you're onto something much bigger. And again, it might be back at these levels. And it might have gone up to 1,000 or whatever it is and then back down.
Yeah. Do you have a higher low?
Yeah. A higher low, nice base.
Yeah.
The number of holders remains, stuff like that. People are building use cases. Good signal.
Could it be that you end up underperforming people who followed your don't fuck this up advice?
Of course. And I don't worry about that because it's my responsibility. So maybe my bet in SUI is wrong. And maybe I end up switching later into whatever it may be, Solana, back into Solana, or whatever the trade may be, Zcash, and other people have outperformed me. I don't worry about that. I'm just doing the best that I can do for my own capital. And I have to assess things on a real-time basis and assess has anything changed or not. And if I don't think it's changed, I just continue as is and assume that I should get it mainly right. You might get it really right, but don't assume they will. As long as you get it directionally right enough, you should be okay.
Yeah. I read a tweet of a guy whose girlfriend has been dollar cost averaging ETH and Bitcoin since 2019. No crypto, Twitter noise, no drama, nothing. And she has outperformed massively her boyfriend. Obviously.
Well, the standard understanding is in brokerage accounts, the best performing clients are dead ones.
Yeah. You mentioned Chris Beniski before. On your podcast with him, you said that most people are agonizing now because they're flat or negative this cycle because they didn't buy the low in size, which is very hard to do.
Yeah.
So we always get back to kind of point zero, which isn't the way to make true money in crypto, just dollar cost averaging Bitcoin forever, like an S&P 500, but with better returns.
Yes. But I would say even better is to weight your dollar cost average to when the market's down X%. Let's say down 30% or more, you do 3 times as much dollar cost average as you do when it's making new highs. You will definitely compound better. It's not that difficult to do.
It's harder psychologically because I still have this FOMO. I buy Bitcoin every month. Yeah. I have this FOMO that I always think that it's much more likely it goes up than down. And then I always end up buying local tops. I'm like the Michael Saylor of newbies. Literally like a couple of weeks ago, I'm like, oh, it's going back to 106, right? I usually I buy at the end of the month. No, I'm just going to buy now. And then it goes down to freaking 80K. 5 days later, I'm like, fuck's sake. Yeah. I can't believe it.
Yeah.
I'm just whatever.
Yeah. I added to my position. I thought, it was on its way back up again. I thought, listen, it's probably going higher. And then it was in SUI and then it just went poof, back down below where I bought it, well below where I bought it. I'm like, really? And that was 3 weeks ago. But I don't even think about this shit in the end, because once you've been around the market long enough, you realize you don't remember a single one of your entry points.
Yeah.
Not one. You don't remember when you were the hero buying the dip, unless it was the dippity dip. If not, you don't remember it. And you don't remember when you blasted a local high, because it doesn't matter. You look back in the chart, it's like, who cares?
Oh, you remember buying Bitcoin at whatever, 10K before it went to 3.5K during a March crash, and you're still up 10X, right?
So, I know. It's really
and you were
hard
down 80% in
and you were probably swearing at whoever you followed into that trade on X, calling him a fucking moron and a scammer and a cheat and a liar, right? And it went down to 3,500. See that guy? He ruined my fucking life. And you're now up 10X from the entry price. It's like, this is the thing people don't understand in crypto. Time is everything.
You have a journal where you collect all the insults?
No, but I do on the Drinks with Raoul show. I've started doing
I saw actually
mean tweets.
You reading the tweets insulting you. Actually, it's good. It's a good way to process. It's a good therapy session.
Yeah. But, it's signal to me is when I'm not communicating things clearly enough. I try really hard to communicate things clearly. And if I'm seeing that people are like, you told me Sui would go up because on that podcast you said it was going up and then it went down. You have to kind of explain to people time horizon, the dollar cost averaging idea. Are you in the right part of the risk curve for you? Do you understand what you're buying here? Do you understand you're buying an earlier stage token that has a risk that it doesn't get network adoption? Do you know how to spot if it's got network adoption? If you don't, move to Bitcoin. If you do, even everybody became ultra moronic on ETH, saying ETH's going to die. I'm like, the thing with the deepest, largest amount of active users, wallets, businesses built. I mean, 6 months ago, 9 months ago, people were like, well, ETH's going to 1,000 and below and it's all over. Because people were just following a narrative and not actually just looking at the reality of it.
Yeah. Well, let's look at that now. Before I said I went to Silicon Valley, I talked to the biggest investors and builders there. Silicon Valley understands exponentials, right? So I usually ask most questions and I listen. But in this section, I'll try to do something a bit different. I'll bring the insight for the podcast trenches. And I obviously ask for your opinion. So people don't get mad if I talk a bit more than usual.
In that accent, which will get them mad. Because this weird Swiss accent.
People get mad anyway.
And they're going to accuse you of being French, obviously.
Exactly. I had a comment. I never met a Frenchman who I liked. Okay.
People are so
I
nice.
met French women who I liked, but I didn't meet a French man who I didn't meet. Whatever. I was like, okay, cool. Whatever. Actually, I laugh. For me, it makes me laugh every time. I'm like, okay, you have a reason to be mad. They always find a reason to be mad.
I know.
Anyway, I was thinking if I bring a few of these opinion I kind of collected from there, it's going to be very helpful for the audience.
Super interesting, yeah.
And so let's go, basically. The first one is I see quite a lot of early crypto believers. When I say early, I mean 2017, 18, 2021, right? It's not that early, but it's been some time, right? They're leaving to invest or to build in other industries, especially AI. They tell me, I'm disappointed. Crypto hasn't really delivered on its promises, decentralizing everything, decentralized dentists, decentralized Amazon, decentralized everything. This was the really cool thing. But here we are. We have some ETFs in Wall Street. We have some stable coins. I'm disappointed. Therefore, I'm leaving. If I read between the lines, I think that the reason they're leaving is because they haven't been able to make easy money for a couple of years. I think that's the reason. Or maybe they were down bad this cycle because it was much harder and basically they realized I don't have an edge anymore, right? But what they're saying, these people, they're saying crypto big returns are over. It's done. I hear that. Cool. Then I go to Silicon Valley and I talk to the guys who invested in Notion, Figma, 10 million valuation. It's worth 30 billion now. The guys who are building the ETFs and see all the flow and all the narrative, what's going on, right? On the field, right? And I hear the opposite. They're saying the big crypto returns are still upon us. I was recently in Silicon Valley to record podcasts, obviously, and I talked to Avishal from Electric Capital. We invested in companies like Figma, Notion, made 1,000x on multiple of these investments. And he basically talked about crypto like venture bets, which is something I didn't really think before because
it's liquid venture.
Basically, but I was thinking because it's liquid, then people, like most people, like everything's kind of gonna go up, right? But basically, the harsh reality was in venture bet, it is normal that the majority of the investment go to zero. They actually fail, which we've seen with crypto in the last couple of years. The majority of the crypto, okay, maybe you don't lose everything, but you lose most of your money. And that's normal. And then there's a few ones that are great they're amazing investment. And the problem that most people, the mistake that they make is you should hold on them forever. Because when these exponential bets work out, they become so much bigger than you can imagine.
Yeah, I'm going to push back a little bit. As a VC, you've got in pre-token generation events. Your valuation has an even further cushion. So when the token's been trading, you buy it on the open market, the power law doesn't work as well. Because the power law is that distribution where 5% gives you all the returns and everything else, middle chunk does okay and everything else fails. Really, still the price you buy at is a significant driver. And I've tried both methods. So I tried it the last cycle in 2020. I bought a broad portfolio. And yes, most of the returns ended up being in ETH and Bitcoin and a bit in Solana at the time. But really, holding the rest didn't give me that value. And I don't think any of those, Tron's probably done well this cycle. There's a few, maybe if I look through the ashes, the rubble of what I bought, but most of it was shit. So I don't know. It's not easy, but if you get it at a very low price, it makes it a lot easier.
I think the argument here is basically that even a Bitcoin or an ETH or Solana is still cheap today, can still have huge returns if they're successful.
So my view on this is, and I keep saying it, is we're $3.5 trillion asset class today. Just take the trend rate of growth of the market cap in a log regression channel and you get to 100 trillion in 10 years. And that's even assuming some slowing. So it doesn't go to 2 standard deviations overbought. Just some slowing of the trend, you get to 100 trillion. So we're only 3% of the way there. Then let's go back to, okay, Bitcoin dominance will fall over time versus smart contract dominance, which will rise because smart contracts have more use cases. That's not a diss against Bitcoin. It's just the applications layer is so much larger than the collateral layer, which is called Bitcoin, the collateral layer of the economic system. If you think of the collateral layer of the economic system, it's US treasuries. Then you look at the entire leverage of everything built on top of it, it's much bigger. So it's the same with this. So that layer over time will outperform. And so just making sure that you have enough of that exposure to capture this 3 trillion to 100 trillion, because it's not all going to be Bitcoin. That's actually the hard part. It's actually a little bit difficult to do because just buying ETH doesn't necessarily do it. But yeah, so the trade is still there.
Yeah.
Right? There's still a 30x in the entire market cap of the space, a 33x. That's monstrous. So what does it mean for some of the winning tokens? Not 1,000x's all over the place, but it's hard.
Yeah, this is what Silicon Valley learned with tech, right?
Yeah.
That's actually applicable with what Wall Street doesn't understand because they think linearly, and what Silicon Valley understands.
Wall Street thinks linear and mean reversion. That's their 2 things. And then they look at crypto, and every time there's a boom and a bust cycle, they think it's mean reverted. When we all know that if you put a nice log chart up, it's just actually a pretty smooth trend. And then you look at Amazon, Google, Tesla, all of these companies have all been the same. They're network adoption models. And so they're volatile in their early stages. And as they become more mature, they become less volatile. It's exactly the same. And Silicon Valley knows this intuitively. That's their entire business model.
And volatile could be chopping around for 5 years, like ETH has been doing, right?
Yeah.
But if you expand to maybe 20 or 25 years, you'll see that not only it's exponential, but that the meat of the growth happens later on.
So, good friend of mine, Mickey Malka, who's been on the podcast, Ribbit Capital, he was an investor, seed investor, I think, in Robinhood. Yeah, he's probably the best fintech investor of all time. So he got Robinhood, and it did nothing. They got no traction. Millennials, young people didn't want to trade stocks. Then the pandemic comes and it goes exponential. I mean, they did have a decent start, but then it kind of plateaued. Then it went like this. Then the GameStop thing came. I mean, Mickey had to bail them out because of this collateral call that they had and had to stick in, it was going to go existentially bust. You turn back, you barely sit in the chart now because it's gone up like a rocket ship because it requires staying power and understanding that there are potential existential events. But if you survive them, you have Lindy effect, which means that the business becomes more valuable as a network over time.
You love to say it doesn't matter. There's another guy called Hasib who was on this podcast last year and who was raised in the Silicon Valley and who agrees with you. In an exponential trend, it doesn't really matter. No. I'm going to steal some of his recent words here for everyone to understand what's probably going on with crypto right now. I believe in the exponential because I've lived it. I've seen it over and over again. You might respond that stablecoin growth might be exponential and that DeFi volumes are exponential, but they don't accrue to ETH or SOL. The value doesn't get captured by the chains. To which I answer, you still don't believe in the exponential because the exponential answer is always the same. It doesn't matter. Raoul's favorite sentence. This stuff is going to be so much bigger than it is today. And when it's absolutely enormous, you'll make it up on scale. That's what exponentials do. When it comes to truly exponential technologies, no matter how big you think it's going to get, it just keeps getting even bigger. This is the thing that Silicon Valley always understood better than Wall Street. Silicon Valley was raised on exponentials while Wall Street was raised on linearity. And yeah, people will hate me for that word or my accent. Linearity. And over the last few years, crypto center of gravity has migrated from Silicon Valley to Wall Street, which you can feel. Talking about ETH and SOL, for example. If you believe in the exponential, if you zoom out, then it's all still cheap. More than anything, I'm arguing to be a believer, not just a believer, but a long-term believer.
So what people don't understand, there's a fight going on X right now about this, and Seeb's part of it. There's the Metcalfe's Law network model people like myself, Seeb, and then there's others who want to use discounted cash flows and other analysis to pick up cheap businesses and be the Warren Buffett of crypto. It has been proven time and time and time again is network models outperform everything you've ever seen before. And it compounds because the more valuable a network is, the more users it brings, the more value it brings onto the network, the more it goes up. And this thing compounds exponentially over time. And people say, we should be valuing Ethereum based on its fees. That doesn't get what it is. This is not a company that earns revenues. This is a network that enables an entire group of businesses to build upon it all sorts of value chains. And how Metcalfe's Law works is you capture the total value and the number of people driving that value. So you get this kind of unit value per person. So you know if you bring a new person onto Ethereum, they're worth $313,000. That's currently the math. While on Solana, it's about $65,000. Now, it's a bit skewed because the layer 2s are accruing as well, but basically that's what it is. So you kind of know that every new user you bring onto Ethereum, the value goes up a lot and can go up even more as more people build more businesses on it. And people forget that compounds. Discounted cash flows don't compound, not in the same way.
Maybe another comment to help people think much bigger than now is is on Bitcoin, right? Which is basically zero revenue. So we can't even kind of use that. People can't even argue on that, right? And
but they discount that then. Then they go, well, it's different. Because
different. So our common friend at Bitwise, Matt Hogan, talks about Bitcoin. I asked him a couple of weeks ago, how much bigger could Bitcoin get from here? And his answer is very simple. Bitcoin is arguably a better store of value than gold.
Mm-hmm.
It's worth $2 trillion today.
Mm-hmm.
Gold is worth $25-30 trillion today. But 20 years ago, gold was worth $3 trillion, which means that gold itself went up 10x in the last 20 years, right? And as we know also, gold is growing rapidly. We've been seeing that the last couple of years. Now, if Bitcoin catches up on gold, that's more than a 10x, right? Mm-hmm. Bitcoin is worth $1 million. But gold is going up a lot also. So if Bitcoin catches up to gold only this part, probably Bitcoin can do more than a 10x. And now, talking about exponentiality, something I didn't really think about before. It's a mix of Avishal and Matt. Add in what happened in terms of exponentiality when Bitcoin, digital gold, is on billions of people's phones, and you realize then that no one is thinking big enough. Because when something goes on a phone, I think Avishal was giving an example of e-commerce, right? He was saying, hey, look, there was brick and mortar, and people were thinking, oh, this e-commerce thing's kind of weird, etc. What happened to not only Amazon, but e-commerce in general when it went on a phone, on people's phone, and it went on everyone's people's phone? What happens to the size of that versus brick and mortar? It became gigantic, much bigger than anyone could have imagined. And now they're basically saying, for Bitcoin, it's digital gold. What happens when it goes on everyone's phone? And that's why Avishal talked about 5 to 10 million Bitcoin price. Because of this, if it's on everyone's phone, it becomes so exponential that it becomes way bigger than people think.
Yeah, because again, Metcalfe's law is the number of users, total value transacted. So if right now we have to open a Coinbase account, we have to do this, and we have to do that, fine. It's restricted to whatever the number is. People say there's 650 million wallets right now. Okay, great. Put it on every mobile phone in a simple format, on every Apple wallet or whatever it is. You've suddenly got 5 billion people. They transact the same amount of value per person. Holy shit. I mean, it's really simple once you understand it. So yeah, the more access there is, the more people join it, the more value gets transacted on it. Yeah.
Just believe in something, guys. That's it.
No, but people believe we can't have nice things because they're too short term. So it's like, it's over. It's oh so over and we're so back. It's such a prevalent mindset that it happens almost on a daily basis. It's so over, we're so back, that people forget this stuff compounds over time because they don't have time horizon. You know, you and I have talked about this almost every time we've ever spoken, and yet people don't listen.
I was 10-year-old in early 2000s. I was too young to understand. Actually, just before I discovered crypto, I was thinking, I wish there was this internet wave happening when I'm at an age where I can invest, right? God damn it, I missed the thing, blah, blah, blah. And then I discovered crypto. I was, holy shit, this is the same thing again. But if you think about it, not everyone will make it because of all this mindfuck and noise and all that stuff. Otherwise, everyone would have made it in the internet era, probably. I don't know how it was. Maybe you can tell me, hey, it was very similar. And if you were able to hold this freaking couple of stocks or whatever, you could do really well. But people, for me, the reason why this podcast exists is that I don't want people to have an excuse to be in 20 years and be like, shit, I was living and I missed it. And I was listening to all this stuff and I was investing, but I missed it.
But to show how hard it was, is Amazon came out. It's like, we can sell books on the new internet. And suddenly this stock started trading really expensive because it was the internet. And it was like, we can sell books. Maybe they can sell something else. Okay. The stock then falls 95%. It's like, it's so over. And then the market starts recovering and Amazon recovers. And Amazon's making no money at all. And the PE of Amazon keeps going up. And then from like 2014 to like 2018 or 17, it's trading at a PE of 850. Every hedge fund's trying to short it because they didn't see that it could go from a bookseller to being the largest online marketplace, of which it's not just about getting a revenue share of products sold, but it's also all of the businesses that can get built on top. Oh, that sounds like Metcalfe's Law, doesn't it? And then all the ancillary services. Oh, we need to do something with our compute because we have all this compute. We need the cloud. They build AWS. And then, let's create an entire logistics supply chain because they need Amazon warehouse. It's staggering how much value came out of that network. If you value the total network value of all of the business revenues, we only value Amazon really on the percentage of sales that they keep. But what is the total size of the Amazon economy? It's a monster. And no, it was not easy to see that or hold on to it from day one. That's the issue, is it was not easy. Microsoft, yeah, that was easy. It was everywhere.
But today we have this framework of tech and Silicon Valley with crypto. So it's less hard. It's still not easy. There's so much noise and there's so much volatility. And it's not just short term, like 1 to a week, 1 to a month, sometimes a year or two.
Yeah.
And it's painful because it's liquid, right?
Yeah, because the VCs didn't have that. They'd get annual mark to market, of which half time it's just guessing, so they can lie about the volatility. When anybody knows who's run a startup, is we're so over, we're so back, is almost a daily occurrence when you're in a startup. It's every day is an existential crisis, or you know what, we're all going to be gazillionaires, and it's never anywhere, somewhere in the middle of all of that.
To wrap up this part, where I gave a bit more of my thoughts and experiences, I wanted to read Chris Berniski's comment in your latest podcast with him. Compounding wealth over time is a boring exercise. Does that mean that the new ADHD generation is cooked and can't build long-term wealth because their addiction to short-term dopamine leads them to the inevitable financial death wish that perpetual future contracts, online gambling, meme coins, and prediction markets truly are?
So when you learn to ride a bike, did you fall off it? Yes. When you learn to ride a bike and you're going over gravel and you put the brake on, you learn very quickly that after a while, the wheel locks up and you fall off your bike. You learn things by experience. Humans learn not to touch fire by touching fire. No matter how much you tell a kid not to touch something hot, they will touch something hot until they understand it. And so we've just onboarded a new generation of investors. They need to make mistakes. But over time, they come battle hardened and they learn from their mistakes. We've all learned from our mistakes. So what we can't do is assume because they're wild, rampant speculators today, they'll never be wealth compounders. What I do understand is their stake at the casino is pretty small and they don't have the time because they don't have job security over time. I get that. So some elements of casino to get a stake and then compound is justifiable. So it's kind of a mixed bag. And yes, it is boring, but I think once people have made some money and lost it again, they're more careful the second time around. You're the classic example of this.
Yeah. And what happened like a month or a month and a half ago, I think, taught, hopefully, people that leverage always ends up the same way for everyone.
Yeah, I mean,
it does.
A
million times.
I told that
guys.
a million times. And
it happens all the time.
Yeah, all the time. Is leverage, leverage in a 70 to 90% volatility asset or more in some of these things is always going to blow up every single time.
And it will happen again. And again. We should start a band or a choir together. If we don't make it in crypto, maybe we can do that.
That's right.
You mentioned before SUI. We talked about concentrated portfolio. Last time you told me, and some people took this as a clip, a massively overweight SUI. What does your portfolio look like today in December 2025?
I haven't done a single trade apart from I bought some more SUI 3 weeks ago.
Mm.
So I haven't actually done anything, not reallocated any assets, done nothing. Yes, I bought some more NFTs since I last saw you, but that's it. So I don't do anything much. And people are going to clip this again and say, look, he's really overweight SUI, blah, blah, blah. And then somebody's going to say, scammer. It's like, everybody just fuck off. Just fuck off. My allocation is my business. I tell you that I have conviction in something, and I ask you and I beg you not to have my risk profile. All I'm trying to do is give you truth, which is what I'm doing. If you ask me, I'm asking you not to fuck it up. I'm asking you to think about your own risk tolerance and to do your own homework. So all of these fucking people who clip podcasts and then try and hang me on it, either for good or for bad. See, he mentioned our token.
Yeah.
It drives me insane.
There's so much shit like taken out of context all the time. I mean, that's how social media works.
Yeah, because you will take this swearing clip and put it on. I know you will. You're looking at it now, so there's the money shot. And you can all fuck off. But it just drives me to despair because you reduce everything down to a soundbite, including all markets and everything. It's like, that's not, I spend so much time communicating, but nobody wants to listen to the full communication. They just want to say, I hate him or I love him. It's like, please don't do any of that. Just say, oh, that was interesting. That kind of, maybe that sparks an idea and I'll listen to somebody else.
Oh, that was rude. Okay, you're Brit. We forgive you. Tell me your honest thoughts on SUI in late 2025. Because obviously, I mean, everything goes up and down in price, and then the sentiment always follows the price. And I'm pretty also active in obviously, I own SUI. I'm pretty active in the ecosystem. And I have some people coming to me and saying, Kevin, what do you think about SUI? I'm like, you guys are in the ecosystem, right? What's your, tell me more about what you've seen or researched or talked to that make you still so convinced in late 2025 despite this crazy volatility.
Yeah. So it is not acting out of normal versus other tokens where it is on the risk curve. Okay. So that's a signal point. We've noticed that it has over time broadly outperformed ETH and Solana, but in recent times underperformed. But still within an uptrend, it's been outperforming. It is all on SUI and Miston Labs to prove that this amazing tech, because the tech is unquestionably good, can get adoption. So that's the game we're all playing here. So what does adoption look like? Well, we need users, and they've been accumulating users at a rate of change faster than Solana did in the last cycle, and faster than most layer ones. Rate of change, because obviously you're starting small. It's new, but that's when the most gains are made. Then we need to look at this value idea. How much value is being transacted? So have they had the big breakout gaming? Well, they've got the EVE Online thing coming, but it's not online. It's not happened yet. Yes, they've had some gaming stuff, but the handset was a unmitigated disaster. So, we see them doing things that fail and things that succeed. They put a lot of Bitcoin on chain. That was a big value driver because it's a chunky asset and it gets moved around. That adds value to the network. Stable coins have worked well on SUI and are growing very fast. DeFi, somewhere in the middle. So it's still patchy because it's early. Think about it. They've only been marketing this to the general world for 3 years, of which maybe 2.5, really, that people start getting notice. So it's very early in the stage of the business. But when I break it all down and put the model into ChatGPT and my other analysis, and then check it against somebody like Jamie Coots, who's the chief crypto analyst at Real Vision, we both come up with the same answer. If you're using Metcalfe's law and adoption models, and you're careful not to get gamed by active users and stuff like that, so you're very cautious, it's about 80% undervalued versus Solana. So my model is saying it's very undervalued. Does it have to trade at Solana parity in terms of users? Not really, but it's just saying it has convexity to the upside. So then we need the market to rise and start breaking higher. And then we can see, is Sui doing what I expect it to do?
Mm.
And are they going to get more adoption and more activity? So it's still yet to be proven, but so far the metrics are showing as a layer one, their rate of change is faster than everybody else's, and they're accruing considerable value per proven active user.
So the majority of your thesis is based on models and data.
Yes. And technical analysis.
Mm.
And yeah, it's basically that.
How do you ensure in crypto, this is not a Sui specific question, but in crypto that the data is correct, that the data that your model uses is correct?
You can't. And so what you try and do is be consistent amongst your analysis. So the way that you measure active users in Sui is the same for Solana, is the same for Ethereum, is the same for Bitcoin, whatever it is you're looking at. And so, that work suggested that Avalanche, Near, and Sui were pretty cheap.
Mm.
And if you think about it, it makes kind of sense. They're all seeing quite a lot of activity. They're seeing new things happen, and they're seeing some scale. Kind of makes sense.
Do you have some insight as to where these users come from? Who are these users?
I don't really know. Usually it's from Web3 itself.
Mm.
So people like you and me, we've come across to a new chain and we'll open a wallet and we'll do some stuff and we'll play around in DeFi and we, whatever. So we're now an active user.
Mm.
So a lot of it is that. And then, whenever you get a breakthrough that allows people to onboard from Web 2 into Web 3, it might be gaming. Suddenly you become an active user. Now, a gaming user, you might be using blockchain rails, doesn't actually drive a lot of value because they're doing small transactions. So you need a gazillion small transactions to create value versus that user. So those users aren't actually super valuable. What you really want is what Bitcoin has, which is quite a lot of users transacting large scale value, particularly when you've got a super cluster like a sovereign wealth fund who can own, or Michael Saylor. Michael Saylor is a great example, a super cluster that has a gazillion dollars of Bitcoin and it's one user.
Mm.
That kind of thing is what you want to get to.
Last time we talked, you said you have to be paranoid at all time.
Mm-hmm.
And I really have this thing, obviously since the Luna experience, but not only about price going to zero, it's more, even the whole Luna thing was based on the UST, right? Terra stablecoin. And there was some protocol, Chia or something in South Korea. And it was kind of proven afterwards that all these numbers were faked. And so for me, that's always this now. I'm like, whatever the price or whatever an asset, but I'm always thinking, I don't trust any freaking numbers I see in crypto.
Yeah, true.
Because it's also such a...
Everything's gamed.
Everything's gamed. Like, whatever. I mean, Twitter, follower, engagement. This is like very basic thing, but you're like, come on, really? But then all this thing can be gamed so easily to raise these hundreds of millions of dollars, and then the whole thing is completely inflated from the beginning. And
so one thing that I filter for is persistence of active users. Because I saw it with the Sui Foundation, we had some games on Telegram that, was it in Telegram? No, whatever it was, some games. And basically they were just gaming the system. And so not the Sui Foundation was, but the people building these games, because they just ran people through this pipe. They use the game for a while and then disappear. So they're not actual active users, but it looks good.
Mm.
And it's like, we don't want that kind of bullshit activity. So we kind of got rid of it. So you can see that, but it's really hard to persist with because you run out of money. So it's a very expensive thing to game.
Mm.
So eventually people run out of money. So if you see it's persistent, it means it's probably more likely to be real.
So what you're saying is that the protocols building on a chain have some, obviously an incentive to fake things, to raise money, etc. What I'm thinking is also probably some foundations, I don't know who, right? But have an incentive, because it's all such a game of token price
the number to go up. Yeah, they want the number to go up. And so this is why, and you're right. So the numbers we don't know. We look for some metric which is comparable. We look for some persistence. We look for some explainability. So that's your smell chest is, can I explain these users? Then after that, it's like, what do the fucking charts say? Because if in doubt, the chart tells you something. How do you look at a chart? Well, you really should look at it on its own first. The long-term trend, the short-term trend, short meaning daily charts, but out to weekly and monthly in log charts. And then look at the asset versus other assets to know, is it really doing something different? And there's usually a signal in that, hey, something is not working here. Now, it could be intermediate noise, or it could be more meaningful. And so, look, there's a lot to do for people, but they have to do it because you won't know. If you're further out the risk curve, your job is to be utterly paranoid at all times that your asset allocation is going to actively destroy your wealth or underperform. And so you need to be paranoid and ask yourself the question, am I wrong?
Absolutely. We talked about generating income before. Business is obviously one of the best ways. It's still very underrated, especially in this world. And also me I've been running businesses since 10 years now. The first one was pretty good, but just like consulting business, making cash is never like amazing. This one is actually pretty amazing. And you start to realize my life really changes in terms of how I can see things and invest and all that stuff because I'm generating more income. Sounds so stupid, right? Or the people still, because it's so hard to generate income, obviously, they still think I need to gamble, right? You generate income every month. What are you doing with the money that you generate every month with your businesses?
I want to step back from that question first. You don't realize how lucky you are doing what you do or what I do. And the reason being is we have a job where we invest our time and get paid. Okay, great. That's all jobs. What you're actually getting paid to do is build a network, which is like the single most valuable thing a human can do. And you're actually getting positive cash flow from building a network. Even though you have to bust your balls by traveling around the world, getting ill all the time and not having a girlfriend because you're lying that you've got a girlfriend. But this thing is building you a network where you can chat to Hunter Horsley, you can call Hasib, you can call whoever. You've met Brian Armstrong. That's value. The value is not in the revenues you're building from this business. It's in what that network can provide, or you can provide to that network, more importantly, because you always give more to a network than you take out. Because if you extract, it's over.
I have to add something on top of that, because I started to realize recently, most people think with reason that podcasting is not a serious job. I completely agree with it. But I was telling them, actually, it's you're doing 4 or 5 things, key things all at once. You're building your network. That's one of the things.
Yes.
You're generating money. That's one of the things. You're doing, every time you release a podcast, you're doing marketing indirectly. It's your product, but it's also your marketing that other people say, can I come on your podcast? Can I be a sponsor, etc. The guest is saying, I want to sponsor your podcast. So at the same time as you're doing this thing where you talk to them, you're basically building a network, but also selling and also getting a kind of client. And at the same time as you do all this stuff, if you do some clips and all that stuff, you're building your personal brand. It's fucking incredible.
And then you have somebody on Twitter saying he's a fucking moron, I can't understand him. That's your reward.
I'll take it. It's kind of amazing, to be honest. Like I just still can't really, I still don't understand.
Well, I mean, you and I've talked about this in the past. Stephen Bartlett's proven that. Joe Rogan was more successful to start with anyway, but Stephen Bartlett's been an amazing example of that. And we're seeing a rise of a bunch of these tech podcasters out of nowhere who suddenly, Dwarkash came out of nowhere, is now huge.
Yeah.
And they build enormous networks. I mean, last time I spoke to Stephen Bartlett, he was like, the investment opportunity he's had from just having guests on, and that they've reached out to him and say, hey, listen, Stephen, you might be interested in this or whatever. It's like, it's amazing.
Yeah.
And the other thing we've talked about in an AI world, human to human connection is massive. And I think one of the reasons your podcast does well is so few of us have the time and the ability or the youth, frankly, to travel around the world. And I've done it. When we started Real Vision, it was all like this. And we stopped doing it because I just didn't have the time. But you have it. So you've got this difference, which is this personal interaction. And then you're building a network based on personal interactions. That is a moat in a real world, is in a world of AI, world of us living digitally, the fact that you're building a human connection, which is why people say to you, hey, can I sponsor your podcast? Because I've just been on it.
It makes the whole difference.
Yeah, if not, you're speaking to the chief marketing officer. They're like, oh, join the list. What's your pay-per-click? And what's the... It's like, it's bullshit.
Yeah.
When the guy, you get the right guy and he's like, well, I really like how you do this.
Yeah.
Can I sponsor it? It's like, yeah, thank you.
That's what happens with literally everyone.
Yeah.
We never reach out.
No.
Never.
No.
And I was thinking about that a couple of weeks ago. 2-3 weeks ago, I was in Silicon Valley with Brian Armstrong, the freaking founder of Coinbase.
And I haven't been able to get Brian's interview. So I was pissed with you.
Never?
Sorry?
You never had him on?
No.
Wow. Okay. Interesting. Well, maybe I can help. Hopefully. And I was thinking, I'm in a studio with Brian Armstrong for 2 hours. This is never going to happen online, right? He's not going to take 2 hours. It makes no sense.
It will not happen if you went to his office either. Your secretary will give you like 15 minutes, half an hour. Have 2 hours where he's opening up to you.
Yeah.
Creates a whole different interaction.
Yeah, it's insane. It's absolutely insane. It makes no sense. Every time I think about it, it makes no sense. But whatever. Sometimes you don't have to think too much. You just go for it. You do the thing.
Yeah.
That's it. So I was asking, you're generating some money every month. What do you do with this money? You said, okay, I bought some Sui a couple of weeks ago.
Cash flow goes into investment, lifestyle, costs. It's the same as everything.
But investment, Sui, this is other stuff outside of crypto.
Well, I bought a shit ton of digital art. I mean,
okay, so mostly digital art.
Huge amount of digital art. You know, over the cycle, as your number goes up a bit, you want to recycle stuff. So you buy new stuff that you want to change, your stereo, your car, or whatever. You know, so you do that to keep because if not, the quality of your possessions goes down over time because cars break, they get old, they get frustrating, and they keep getting fixed. So you do a lot of those kind of things. So there's a lot of that, of just kind of keeping the quality of your asset base high. A lot of travel. You know, I like spending on holidays and traveling. So that's quality of life. So quality of life is an investment. It gives you experiences. So it's a lot of that. It's mainly quality of life, investing it, and then servicing liabilities.
At least you laugh about it.
What can you do? What can you do?
Servicing liability. You mentioned digital art, aka NFTs. We have to talk about it a little bit. What's happening with NFTs?
Well, as we speak, Art Basel is on, and half of the digital art market is there. Although a lot of the art they're actually doing is not digital. What's been happening is, as soon as ETH or Solana go to the top end of their range, sales start exploding again because people start recycling wealth. As it goes back to the bottom of the range, nobody's got any money to buy stuff because the opportunity cost of taking your liquid to put it into illiquid assets has gone down. But the thesis shows every time when you get to the top of the range, art becomes the thing and we start setting record prices. You know, we've started to see some very big investors in the space. Nicky Malka from Ribbit Capital bought the Punks IP, CryptoPunks IP, and has built a huge collection under Canvas and is building a exhibition space, permanent exhibition space in Palo Alto called The Node. And it's a foundation to show off digital art in front of everybody coming out of Stanford and in Silicon Valley. We've got other investors like Alan Howard, huge investor in this, and we're seeing more and more big investors coming in to the space building large collections. So we are seeing the value of the art overall go up, but it still moves up and down with crypto prices. So even if you price it in ETH, as soon as the ETH economy is weak, people just don't have money to spend. So the prices dribble down a bit. but over time, it tends to outperform. So yeah, it's still very active, and there's a lot more that's going to come out of this space. Huge.
Yatsu, the co-founder of Animoca, was on your podcast recently. He said NFTs are the asset class of this generation.
Mm-hmm.
I think most people would be like, what the fuck? Is he coping? Is he in denial? Or, I'm asking, does he understand something that most people still don't understand?
Yeah. Everybody just thinks NFTs, monkey JPEGs all went down in value. What a stupid speculative bullshit. People don't realize that crypto hyper accelerates the testing of an idea via speculation. And speculation proved that digital assets have value outside of being the token of the exchange. So we've got CryptoPunks that in total were worth $10 billion, worth $10 billion as a collection. It's the single most valuable piece of art that's been fractionalized. $10 billion. What people fail to understand is we're proving other things with it. Pudgy Penguin is IP. Can IP go on chain? ID. CryptoPunks. Look who's got them. Jay-Z's profile pic on X is a CryptoPunk. You know, I know a lot of people who've bought punks. Vlad Tenev owns a punk.
Mm.
You know, a lot of people own this stuff. Mickey Malka owns punks and has a punk. So it's a social signaling digital ID, online ID for a digital world. So, okay, we're proving some stuff out. The next thing is all of the gaming world assets are basically non-fungible tokens or non-fungible contracts. So that means they're all going to be NFTs. So the scale of gaming is vast. We know that. It's just not happened at scale yet, but it's so fucking obvious that people want the actual value of their assets they're collecting game. But it's more than that. It's every single contract is going to be digitized and turned into an NFT. So that's the whole finance sector. Basically, every single option is a contract. And you can embed the exercise rights and everything into the contract. Every ticket that we have, sports ticket, music ticket, is a contract. Now, if that becomes an NFT, that it accrue value for loyalty and stuff like this, we've talked about in the past, where Taylor Swift or Dallas Cowboys, whoever, can accumulate, holders of the NFTs can accumulate value by going to games and buying merch and all of this stuff. And they may decide to sell that NFT later and somebody else can take all that value, or they can use that value for other things. So we've got the finance sector, every option, for example, that could be an NFT. We've got all of tickets where there's a consumer and a brand relationship. There is culture and those relationships between artist or team and fan, and the assets held within a game. And then we got the art market itself. Okay, that's a big TAM, a very big TAM. What is digital ID? It's a non-fungible contract or token or proof. So every single person's digital ID will be a zero knowledge proof NFT.
I'm trying to think about, so first of all, this is taking a lot of time, right?
Mm-hmm.
And it probably if we have to think about the long-term trend just for Sol or ETH, NFT thing is like probably even longer. Yep. But second, if you really believe all this stuff, this means that these things will bring so much value onto those chains that it's a no-brainer for the underlying chains themselves.
Again, people really don't understand this stuff because they want to hear a narrative. You know, it's all bullshit. Beeple's Everydays that sold for $69 million is the single most valuable piece of block space that exists. It's a single piece of block space that holds the NFT. And there's a lot of that in art. It's going to be the most valuable block space that ever exists. Because it's stored. The property transaction is not stored there. The title deeds are. With these things, Many of them are just, well, some of them are stored on AWS or whatever, but without the NFT, it doesn't exist. And so I think some of the most valuable things ever to be stored there. What it's proving is in a increasingly digital world, everything can go zero in value. AI is going to prove that for knowledge. AI is going to, robots are going to prove it for labor. Everything is going to zero. So in that world, digital scarcity maintains value. It's a very big deal.
Bullish punks. I'm going to hold my punks.
Yeah, I mean,
and my penguins and my grifter.
Yeah, and because over time, we've talked about this, wealth flows upstream. Upstream of all wealth is art. It is always the case, always will be the case. People don't get it. It's a bullshit token, but the signal is there. You're seeing it. You're seeing the value of these transactions, the types of people collecting. It's not speculative. It's the opposite of speculative now. It's thoughtful collection building. The people who are building collections now are going to be building collections worth hundreds of millions of dollars, and they will have spent a lot less than that.
It's not speculative, but the volatility is insane. Like I look at...
So none of us look at it.
Yeah, actually, yeah.
We don't look at it. Do you look at your punks every day?
Well, I never look at it, but I bought two kind of like at the kind of bottom, like 2023 or 4, I don't remember.
Yeah.
It's not exact bottom, obviously. And then it went to like 200K or whatever. Yeah. And then I checked just randomly the other day after a couple of months, and it was down back to whatever, 70 or 80. I have no idea. I was like, holy shit, this is moving a lot. Crazy.
What I don't do is price it in dollars. I just don't.
Just look at
look at the ETH value. And occasionally you might benchmark punks against Bitcoin.
I'm actually doing that. I was like, oh, now it's worth 2 Bitcoin. Oh, now it's worth less than 1 Bitcoin.
Yeah, and maybe there's informational value in that, but really it's scarcer than Bitcoin. But less demand. So, it's not a perfect thing. But I think none of us who buy this art sells it anymore. It's really interesting. So what happens is it just keeps going, stored away into these vaults.
And the signal is the people who are buying these punks, for example, that you're telling me, hey, look, Jay-Z, hey, look, Vlad, hey, look, Raoul, hey, look. I'm kind of the only tourist in there, like literally. But literally, you're like, these guys will never freaking sell this thing. Like never.
No. And so over time, you get this redistribution of people who own a lot early, like we're seeing in Bitcoin now. And then they sell out. The distribution base widens. And really, in the end, when punks are maximally valuable is when there's 10,000 punks holders. And we all think our punk is us. That's when it's maximally valuable. There's been really interesting things like an X copy. There's one of ones that have sold for a lot, but they're very illiquid because you need a lot of money and nobody's got enough money right now because crypto prices aren't high enough. But there's 2 assets. One is called Last Selfie and one is called Mortal. These are one of 10s. So there's 10 of those. And what we found is these have gone up faster in price to crazy valuations because you have a 1 in 10 chance of trying to get somebody to sell you one. The one of the X copy, you can't get. If the one seller doesn't want to sell it to you, you pretty much can't sell it. And a lot of these people don't give a shit about how much you offer them. But when you got a 1 in 10 chance to get one of these things, it's driven prices insane in some of these things. And these are from long-term collectors.
In early November, you tweeted a long tweet. So I'll give the TLDR here. Too long, didn't read. But I read it, obviously. I know no one wants to hear bullish ideas, and everyone is scared and wants to fling poo at each other.
The monkeys flinging poo.
But the road to Valhalla is getting very close. Then you explain a bunch of liquidity and macro stuff and end up saying, buy the fucking dip if you can. When this number goes up, you're referring to the total liquidity index, all number go up. Is your advice in December 2025 still to buy the fucking dip?
Yeah. And I think we had the final low. So we had the October liquidation. So liquidity got withdrawn by the US government via the Treasury General account. We had an air pocket of liquidity from that. and then they shut down the government. And then now there's no liquidity because they can't even spend the TGA. So what happened was crypto, being the most liquidity sensitive, nuked and exposed all the weaknesses of leverage that you and I know so well. The whole thing nukes, and it triggers this, issues with how the system calculates leverage and stuff. Okay, fine. We rally back. We've come back down. Some of them went through it. Some of them didn't go back through that low, but we're kind of basing around those levels. And then suddenly out of nowhere today, things are up 20%, 30% in a day. And you're like, okay, the signal's probably there. So the dip zone, again, nobody needs to buy the absolute bottom. But that dip zone has been forming from November, because after October, we had the November pullback, and then into the end of November, we had the final sell-off. And somewhere here feels like it's there. Now, looking forwards, if I'm right in all of the work that I do about liquidity, we've got a flood of liquidity coming. So right now, the system is telling us the banking system is constrained and it keeps causing spikes in money market stuff. There's not enough money around. The Fed know it. They stopped QT. Okay, one job done. But the other job is they've got to get through year-end funding. There's not enough liquidity for the banks to roll their debts and to do their balance sheet work. So the Fed are going to have to inject some liquidity. It'll be some 3-letter acronym based in the repo market or whatever, but they have to do it. But they made a huge announcement that most people don't understand, which is the ESLR, another nice acronym, and the supplementary leverage ratio means nothing. They never do these things. What they've basically said is what we used to say, US Treasuries carry this much risk, and so on your balance sheet, we're going to penalize you for holding them. But then the less risky asset, so they've got this tug of war with the banks of what they want to do. And they've just said, you know what, we're going to shrink how much risk you have to put on your balance sheet by owning treasuries. What does that mean? It means the banks will buy a lot of treasuries, which is what the government needs to do, is sell treasuries. That's their job right now. So the banks can use treasuries. You're hearing Scott Bessent saying, we want the money to flow to Wall Street, Main Street, and not just Wall Street. What he's saying is, we don't want the central bank to do QE. Every moron on Twitter goes, see, they're tightening. They don't want anything. What they're saying is, we're going to let the treasury print money instead and stuff it down the necks of the banking system. And the banks, being so good at what they do, lever it up and lend it out or provide liquidity. So the entire apparatus of managing the debts is moving from the Fed to the government. So the government creates its own buyer for its own treasuries. It's an easier way to debase currency. But the ESLR changes are important because the system's screwed up because of these changes after the financial crisis. So that was announced, rushed through, because I've been writing about it and I was like, they'll announce it sometime in Jan, Feb that they're going to implement it. No, came through, straight out, done. We've agreed it with the banks. We're doing it January 1st. I'm like, wow. So that tells you they understand the game. The moment it was announced, and Steve Mirren had been pushing this thing through, the moment it was announced, Steve Mirren published another paper that day and said, good job, not enough. We need to reduce all risk weighting on treasuries. So 100% no risk for treasuries. So now there's an unlimited purchasing of bonds that can happen when needed. And you can really expand the money supply. And that, because it's credit, ends up going to ordinary people. They also buy more bonds, which lowers the long end of the bond market, which lowers the mortgage rate, lowers the government funding. It's a big deal. We're talking, this is going to end up being 3 to 4 trillion, maybe 3 to 5 trillion of extra liquidity. Oh, and then we've got rate cuts. Oh, and then on top of that, we've got $1.5 trillion probably in direct banking system deposits coming out of the new stimulus. I mean, don't forget, every single service worker in America gets paid on tips. They're all zero tax. So you're freeing up a ton of disposable income. mortgage rates come down, all of that. So that unleashes the business cycle. So you've got a lot of liquidity things happening all at the same time. In the middle of that, you've got the Clarity Act, whether it comes end of this year or by mid-Jan, it's coming. And that allows everybody to use crypto because it will have been defined on how to use it. So we've got an extraordinarily powerful year ahead of us. We've had to go through the hard part, which was this liquidity squeeze, but that will give us what we want going forwards. We then get the explosion of stable coins. This explosion of stable coins allow the government to issue more bonds because we've got these new holders who could be anybody in any country now are basically owning government bonds via stable coins. So the money is coming to roll the 10 trillion of debt. Meanwhile, the Chinese are printing money. Their balance sheet's increasing. The Japanese are doing massive fiscal stimulus. And so the game is on.
I forgot one thing before when we mentioned why podcasting is so amazing. You learn and you build conviction.
Yeah.
Literally.
Unless I'm totally fucking wrong.
Maybe. but I gather data from different people.
Yeah.
And I can build my own mind, right?
Yeah. So to go back to, I always read what Hunter and Matt talk about. And they're like, Hunter's been around the crypto cycle for a long time. He's not saying it's the end of the cycle, nor's Matt. They're like, from what we see, we've got massive amounts of demand that's working through the pipe.
Yeah.
And so when you play with that and then you think of, okay, the liquidity analysis and all of the things, you're like, okay, probability is it's not over.
Another insider info I have from Bitwise, right, Matt and Hunter, is they want to renew the sponsorship for 2026, the whole year, and they want to go much bigger.
Yeah.
And for me, I was always thinking this podcast is probably going to be in trouble in the bear market, right? So either it means that this podcast is so amazing that I can partner with the big teams that don't care about bear markets, maybe, but as a Swiss I am, maybe not, right? I'm like, okay, whatever. Or these people are still bullish.
Yeah. Speak to the team at Coinbase. Speak to any of these people. I don't see any of these people saying it's all over. They're all saying it's all coming. Because don't forget, if you're at Coinbase, you know the pipelines of institutions who are going to use your rails to tokenize. If you're Bitwise, you know what the RIAs are thinking, the endowments are thinking, the pension plans are thinking. You know the lead time it takes. It takes a long time, but they can see visibility of their pipeline. They know how price sensitive those people are, so they can weight the probabilities of who their customers are going to be. And Coinbase can do the same. We haven't had the Clarity Act yet. Once that comes, it kind of is like, okay, it's now free reign.
So as a recap of what we talk about today, how do I make it in crypto in 2026?
Hold the right assets and do nothing. And don't rent conviction from people. Do your own work. And then you'll find your own conviction. And that's a really important thing. And don't look for a low price in terms of unit cost. And then find a echo chamber of narrative that comes around that. We've all done that in the past. Just openly look at the space and say, how much risk am I prepared to take? What is my goal here? Am I trying to compound wealth, or am I trying to get my starter pack of money to play the casino with? I get that speculative side, but you can do it in a smarter way and just have a time horizon that is realistic. And looking at it 3 months, 1 month, 9 months, 1 year still doesn't make sense. My entire thesis is the length of the cycle. I think the length of this cycle is 5 years. I changed my view. I thought it was going to be 4 years, but my forward-looking indicators kept pushing out. And I'm like, why is this happening? And then I realized that the debt. And so 5 years is my time horizon. Everything else is just fucking noise.
What's one thing that you're holding on to, but you know that you should let go of?
Well, that can be a psychological question or an asset question.
Let's talk about Raoul as a person.
I think you hold on to the idea that you can help as many people as possible. But you have to let go of that because some people don't want to be helped. And it's really frustrating. And you're trying to do the same thing yourself. I see you in your tweets all the time. You're desperately trying to anchor people on, look, I want you to make this. But people are trying their hardest not to do it. And I try and communicate. And then we go back to the getting attacked online because people don't listen to what you're talking about. They don't actually even listen to the long 2-hour interview you've done. They don't actually read any of the research, even when you make it public. They don't do it. And you're like, I'm trying so hard to help, but you realize in the end you can't help everybody because people just don't want to be helped. So I have to let go of that because it's painful because you really, really want to help people.
How do you do that?
How do you let go of it? I think the 80-20 rule, you just have to help as many people as you can and realize that, and it's hard because you have to deal with this online hate stuff, which, you can try and have a shield up, pretend you don't see it. But in the end, it's like, why that's happening? Why are they angry? That's what you ask the question. Not necessarily directed at me, but why are people angry? And you realize it's because they're not making it. And you have to realize you can't put everybody on the lifeboat. You'd like to, but you can't.
What does the voice in your head tell you every morning when you wake up and every night when you go to sleep?
Keep going. I mean, it's like my job is to live in the future. And I live in the future and I just see the path of that, of what it is you want out of your life. So really, it tells you, just keep going and don't worry about stuff as much. I've learned to worry less about who upset me, what happened at work that day, all of this stuff, to realize most of it doesn't matter. Is it directionally going where you want it to go? I mean, obviously, we all wake up every morning going, how much is crypto down today?
To be honest, last couple of weeks, I didn't even look anymore.
No, everybody stopped looking. It's funny. Everyone stopped looking, and Twitter even stopped mentioning prices. They're just like, oh, fuck it. And it's so over, we're not even going to bother. And you get used to that. But just always keep focused. It's exactly the same thing with the crypto bet. If I think it's going to $100 trillion, focus on that. Not about, did Sui fall 30% in the last week? I don't fucking care unless my entire asset allocation is wrong. Did Solana go down? Whatever it is these are great assets, and you just want to keep your eye on that.
It probably wasn't the best Thanksgiving for crypto bros this year.
Luckily, I'm not an American, so I don't have to do that.
Thank you, Raoul, for another amazing conversation. There are some guests with whom the vibes aren't that great. Actually, I have one that is a pretty big crypto guy.
Oh, really?
The vibe, I'm not going to mention who it is.
He probably hates French people. He doesn't realize you're Swiss, but...
I just feel like he never really wants to be there. But anyway, the connection is just not there. Maybe he thinks I'm dumb. Maybe I'm dumb. I don't know. It's just weird. And then there's other people with whom the connection and the vibe are just almost perfect. And you're definitely one of those, one of my favorite guests. So thank you so much for putting yourself out there in the good times when people call you the man, the myth, the legend, and in the bad times when people call you a moron. Raoul is always there.
It's so over, we're so back. That's the endless cycle. Even for me online, it's like, he's a hero, he's a zero.
It's going to happen again and again.
Oh, yeah.
There are many people who love you for your candor and for being so real, and I'm definitely one of them. So from me and from the entire When Shift Happens audience, thank you so much for doing this. It was a blast, as usual.
It's always good fun. I really enjoy these. I've got to be your most repeated guest now.
I think
is this
probably it's the fourth time.
Yeah.
Twice a year is great. It's perfect. Thank you so much.
Yeah, thank you. I enjoyed
awesome.
it as ever.
As you probably know by now, I host some of the biggest names in Bitcoin and crypto on my podcast. But a lot of the best stuff never makes it on air. The Shift newsletter is where I share that raw behind-the-scene alpha, the insights, stories, and lessons straight from my guests that you won't hear anywhere else. If you want the real inside take on Bitcoin and crypto, join my newsletter, The Shift, in the description down below.